Last week, there was a sudden jolt to the crypto markets. Bitcoin plunged below $103,000, triggering a wave of volatility and wiping out over $450 million in liquidations across digital asset exchanges. The sharp dip came seemingly out of nowhere, as BTC fell nearly 5% within minutes, catching both bulls and bears off guard. Analysts say the drop was likely driven by a combination of high leverage, thin liquidity, and a burst of short-term market uncertainty, a common cocktail for flash crashes in the crypto space. Ethereum and other major altcoins weren't spared either. ETH slipped below $3,500, while Solana and Avalanche saw similar percentage losses in the immediate aftermath. The entire crypto market cap shed billions in minutes, highlighting just how fast things can turn when volatility strikes. According to data from CoinLast, the sell-off triggered more than $450 million in liquidations, mostly from overly averaged long positions. That means thousands of traders saw their positions forcibly closed as stop losses, and margin calls kicked in. What caused the sudden drop? While there's no single smoking gun, market watchers are pointing to a mix of macro uncertainty and technical resistance around key Bitcoin levels. BTC had recently struggled to stay above the $107,000 mark, and many traders had set leveraged bets, anticipating a breakout. When that move didn't materialize, the liquidations cascaded quickly. There's also speculation that ETF-related rebalancing and profit-taking by institutional players may have played a role. Especially as Bitcoin remains up significantly year, these players often move in size, and when they shift risk, the entire market feels it. Still, many analysts are urging calm. While the drop was sharp, it wasn't entirely unexpected. Bitcoin and the broader crypto market have been in a high volatility phase following months of gains, and corrections are part of the cycle. Especially as the market adjusts to new all-time highs. Zooming out, Bitcoin is still trading well above previous resistance zones from earlier in the year. Many long-term bulls believe dips like this present an opportunity, not a reason to panic. They point to strong fundamentals, continued ETF inflows, and long-term institutional interest as reasons to stay optimistic. But in the short term, the message is clear. Volatility is back, and traders should be ready for more choppy moves as the market searches for a new equilibrium. We'll continue to monitor the situation as it develops and bring you updates on where Bitcoin and the broader market head next. Stay tuned, and as always, trade safe.